Welcome to our viewers. Wishing the best to all of you on the eve of New Year. Here today we are going to share our views with you on the topic US dollar's hegemony on global finance and global trade. We know Bretton Woods system has already established US dollar as a global currency of global financial world. While after 1960, Greenback's hegemony on global financial world has made US dollar the strongest global currency of global financial world. So, seeing the size, strength, and global presence of US dollar, it seems US dollar is unchallengeable as a global strongest currency and as a global stronger and the strongest mode of payment instrument for global transactions. Further, lion's share in global forex reserve of US dollar, where more than 88% global transactions are made through US dollar, along with global investors' preference to keep in liquid asset form the US dollar has made US dollar the strongest global currency of global financial world. Here, global trade and global finance have virtually become the kept of US dollar, where US administration along with Fed Reserve aggressive policies have made US dollar a financial weapon as a stronger mode of global payment system, and out of it the global financial system has become a stronger, and out of it, by making US dollar a stronger financial weapon, it has been used to regulate the global market, global financial market, global trade, and global currency. Although this is USA's nationalistic financial thinking to be used to bully her partners in global trade and global finance. In the same way as in Indian context, we see that Hindu Rashtravad as a cultural weapon is being used to bully its political competitors in Indian political scenario. The global trade, where further the US dollar as a global currency has appreciated recently above to 7%. Even after rising inflation in US economy above to 8%, along with dollar printing by Fed Reserve on and above 30% of dollar in circulation in US economy has brought a peculiar financial situation in global financial market. So in the midst of appreciating US dollar, rising Fed interest rate have brought a global volatility in global financial market. And in this situation, our global corporates are selling their debts in local currencies out of fear of rising Fed interest rate and appreciating US dollar in future also. In this situation, when we pay attention towards Indian economy, we see that out of rising Fed interest rate aggressively and appreciating US dollar has brought financial instability in Indian economy. So, RBI has also increased its interest rate just to counter or to neutralize the US dollar effect on Indian economy. Where inflation is rising, current account deficit has increased, foreign exchange rate has increased, poverty and income inequality has increased. The investment, demand and purchasing power have declined. So, our current account deficit has also increased massively. So, to counter it, the Reserve Bank of India not only but the government of India is crying for internationalization of rupee just to drag out Indian economy from deeper foreign trade deficit. This is the situation. When we pay attention towards the interest rate and its impact in Indian economy, we see that in the midst of US dollar's appreciation, the Fed Reserve has increased its interest rate around 450 basis points just to stop rising inflation in US economy. While at the same time, Reserve Bank of India has also raised its interest rate by 225 basis points, not to just to stop rising inflation, but to stop the excessive outflow of foreign capital from Indian economy, just to stop the depreciating Indian rupee and just to stop the declining forex reserve. In March 2022, the Indian forex reserve has remained around 642 billion US dollar, but within few months it has massively declined around 100 billion US dollar and has remained around 521 billion US dollar in the month of October 2022. Here, out of it, the US dollar has appreciated by 7%. And on the contrary to it, rupee has depreciated by 10% in this year. And out of appreciating US dollar and Fed interest rate hike, the US bond yields has also increased by 3.7%, while on the contrary, Indian bond yields has increased above to 7.3% in this year. And out of it, the massive capital or foreign capital outflow from Indian economy has taken place for US economy. And also global foreign capital has also taken a flight towards US economy out of appreciating US dollar and Fed interest rate hike. And its impact on Indian economy is the investment, purchasing power and demand have declined. Along with foreign investment has also declined. This is the situation. If we pay attention towards the debt position of Indian economy out of appreciating US dollar and Fed interest rate hike and its impact on Indian economy, then we see that seeing the global debt position, which has remained around 300 trillion US dollar, while emerging markets debt has remained by 90 trillion US dollars, which makes around 65% of emerging markets' total GDPs. In this context, the Indian debt position, particularly external debt, has increased and remained by 610 billion US dollar. And out of it, more than 55% are dollar denominated debt in Indian context, while out of 610 billion US dollar, which makes around 20% of India's GDP, has increased recently. So far as internal debt is concerned, it is also above to 90% of its or India's GDP. And out of this increasing debt on Indian deficit in the midst of rising Fed interest rate hike and US dollar appreciation, especially dollar denominated debt on Indian economy is going to rise in future and will put extra burden on Indian economy. Further, when we pay attention towards the foreign trade of India, then we see that India's foreign trade deficit has increased massively, and it has because the World Trade Organization in its report has said that global trade is going to decline and will remain around 1% in this year against its expectation of 3.5% in coming financial year. Seeing this situation, the India's foreign trade deficit has increased massively, and out of it, current account deficit has increased more than 4.4% recently, and out of rising Fed interest rate and appreciating US dollar, the foreign exchange rate will also increase massively, and with increased foreign exchange rate, our foreign trade deficit will also increase massively, and its impact will be seen in a different or in a aggressive or in a deteriorated way, and Indian economy will feel distressed. So, to avoid financial or in this financial year, the rising foreign trade deficit, the Reserve Bank of India and Government of India is calling for internationalization of Indian rupee so that Indian economy should be dragged out from deep foreign trade deficit. This is the situation, and in this situation, the foreign trade deficit along with Indian debt position and rising inflation rate, rising unemployment rate, rising income inequality, rising poverty level are going to become worst in coming future for Indian economy. In this situation, it becomes clear that US dollar has become unchallengeable global currency and as a stronger global payment system, where mode of payment through US dollar has increased more than 88% in global trade and global finance transaction. This is the situation that in global financial market, the US dollar has its hegemony, and out of this hegemony, the Indian economy is suffering. So there is a need to find out any alternative of it, but it seems difficult to find out any substitute of US dollar. In the midst of rising Fed interest rate and appreciating US dollar have already made the global volatility in global financial market, global trade position, global debt position, global interest rate. In this situation, we should find out the proper alternative. But it seems difficult for global financial world to find out any substitute of US dollar. And without it, the global trade will decline, global debt position will worsen, and out of rising Fed interest rate aggressively, the cost of borrowing, the cost of production, and the cost of rising inflation, cost of rising energy crisis, cost of rising fuel, fertilizer, and food prices will worsen not only Indian economy, but also the global economy. And with worsening global economy, it will be difficult for India to become a fastest growing economy. So in this situation, the question mark puts over the promises to make India a $5 trillion economy. How it can be possible to make India a $5 trillion economy in this situation, where in the midst of rising unemployment, rising poverty, rising income inequality, and other financial deteriorating situation on financial instability, it becomes difficult for Indian economy to achieve to become a $5 trillion economy. Also, and it is a myth, not a truth, and truth cannot be denied. So $5 trillion economy is not possible in this rising Fed interest rate and US dollar appreciating position and falling and depreciating Indian rupee, depreciating forex reserve, and rising foreign exchange rate and other macro weaker economic fundamentals. So we should pay attention towards these things. Thanks to our viewers on the eve of New Year. Again, we are wishing the best wishes to our viewers on the eve of New Year. Thanks.